Hey traders, welcome to the Friday strategy session and trade recap. Starting with silver, obviously still managing this trade, kind of in a little bit of a predicament as it stands, given that what we're seeing is a little bit of a structure that resembles upside. So we're looking at this as a little bit of an impulse off the lows. And we've gone into this going into this ABC corrective structure, which indicates the Friday strategy session and trade recap, which indicates that what we're seeing next, or what we're going to be seeing next, is another impulse to the upside. Higher time frames don't resemble much more upside. I don't think we can look at all of this as a big running flat structure, because our B wave is just very much on the wrong side of being complex enough. So it's all about managing these trades in an intelligent manner. I was also looking at the possibility that perhaps what we were looking at is something of resembling a little bit of a triangle type structure. You have 1, 2, 3 up, 1 down, 1, 2, 3 up, 1 down, 1 up, and then it falls to the downside from there as a kind of, I guess in a classic charting point of view, you would call it a pendant. I'm still bearish precious metals, but when you look at the structures, they kind of look like they want to rally. So it's kind of a difficult situation in terms of how I'm going to manage the trade moving forward. Lowest time frames we can see, I don't think this little down move is quite done yet. If we take a look at the structure, you can see how we have a nice impulse of the highs. And this just seems to me like it's forming a little bit of a corrective structure for further downside. At least in the short term. So we would see a little bit more downside before that higher time frame structure starts to come into play. If we go back to the hourlies, you can see how that would give us this kind of running flat structure, kind of perfect structure. And that may be a time to get out of this trade and just reassess things moving forward. We can always get out, take a small profit, put an entry order at a logical level and get back in the trade if it continues in the fashion that I think it's going to continue on the lower time frame. So, or on the higher time frame, excuse me. So, yeah, like I said, bit of a tricky technical situation that we need to manage. But like I said, I still think this is going to come down a little bit more. And once we start to turn to the upside, I'll close this trade more than likely and look for an entry elsewhere. Similar situation in gold. As you can see, what we have here is quite a clean little ABC corrective structure that's formed. I don't think the structure is complete. I think there's still a little bit more downside to come. We don't have alternation in these waves just yet. So I think we're getting that alternation now, and we're going to get one more leg down to end the week. And then I'd have to look at closing this trade as well, given that the structure is saying. You can see impulse correction. We might just see this impulse to the upside and then fade from there. Rather than a meaningful move to the upside. It's kind of a zigzag correction, which is kind of one of the worst corrections we can be getting in this situation. We've just struggled to get meaningful downside here. So I was expecting that to arrive sooner than later and just struggling to get that. So I'm going to have to manage these trades, maybe just take my small profit and then reassess down the line. Put in platinum just to show you. Platinum's also indicating a little bit more downside before another leg higher. To the upside. So all these precious metals are showing another leg higher, which is kind of concerning with the overall outlook that I have of the dollar. But like I said yesterday, strong convictions loosely held. If we start to really see turns in the dollar and we start to see these precious metals start to rally, we can really start to look for some good long trade setups. And this is exactly what we're getting here, because if this moves in the way I think it's going to move, we're going to get a move to the downside. We can close the trade, look for a long to the upside, which may take us back to the highs at around about 2000. So that's a really nice trade to the upside. So we can play both sides. I'm just worried we're going to get out too early and my thesis is going to be correct. So kind of battling those demons at the moment. We'll have to see how we're going to handle things moving forward. So just taking things kind of as they come and just see how this price action develops. And what is presented to us. And once the picture becomes clearer over time, we'll act on that information. Euro New Zealand just continues to mess around, chopping around. I still see upside. The structure is still good. I think we're looking at an impulse down or 1, 2, 3 down, which is significant for a little bit of a triangle type structure. So if you have this impulse down, 1 up, 1, 2, 3 down, or 1, 2, 3 down complex, 1 up, maybe 1 more down, and then to the upside, it still looks corrective for more upside in my view. The only reason, or the only way we could be wrong here is if all of this is an A of B wave. What we have here is a significant kind of central structure. Maybe your expanding triangle is here, and the next move down is going to be something along a little bit more complex, something along these lines, and then complete downside. So we'll have time to get out of this for a little bit of profit if we are wrong, because as you can see, all of that's just going to be forming a higher degree A, B, C. So yeah, we'll get a final move up to match this blue one, and then from there we'll get downside. So yeah, if that becomes a little bit more complex, then we'll have time to manage it, is what I'm saying. Or we are very close to taking off. Either we've taken off already, or we're going to get one more leg down as an E wave and then take off from there. That's also a possibility. So a couple of things on the cards. I'll still have break even, so there's no risk on this trade. I still have an entry order above these highs, because if we break these highs, the move should be more significant to the upside, and we should see this continue up to kind of 173.50, which I'll be trading it up to there. Nice little trade, 1% risk, 4.74% return. At the moment, 0 risk with potential for 4.74% return. So I like it either way. We just have to be patient with it and let things play out. Euro yen. So currently have 2 positions on here. We took this initial trade to the downside and then went against us, kept the stop nice and wide, decided to let it run because I believed that we were going to see further downside, and actually ended up entering another entry order at the same level. So doubling up on the risk, and we're now into 2 positions with the possibility of getting some really nice downside on this trade if we see the yen start to strengthen like I think it is. So we currently have 2% risk on, and we will get 6.8% out of the trade if we go down to full target, which I like. The structure is looking really good, as you can see. Really nice ABC corrective structure lined up for a nice big move, and we should see a really quick move to the downside, given that this corrective move, this A wave, was really choppy. So alternation will give us the moves we're looking for to the downside. So far, so good. We've had a nice strong move. Expect this to carry on. Once this breaks this low, I will more than likely halve my risk. So I'll move my stop to these highs at 130. So go back to 1% risk. And once we see more meaningful downside, I will move to break even. I want to give this a little bit of room to breathe. Given the structure that we're looking at, it does really look like a good structure, and maybe even look for a place to scale into the trade even further while taking risk off the table. So make that work to my advantage. As you can see, in terms of trend lines, we are just breaking through this line at the moment, which is a good sign. We don't really use trend lines, but sometimes they are just good confirmation for the trade. That it is working in your favor. So things are looking good for euro yen. Really liking this trade, and we should see this really accelerate to the downside. When you look at some of the other yen pairs, I'm going to just pop these up here just to show you what we're looking at for the yen. Swiss yen looking really good. We've started to get that downside we were looking for. Nice ABC expanding triangle. And when you zoom in, you can just see how bearish or how much yen strength is coming into play at the moment. So potential little entry here for our trade. That's possible. We're keeping an eye on things, see how things develop here. That could be a nice entry. It's kind of really correlated to our euro yen trade. So I don't want to add in too much risk into what basically looks like one little trade. So we'll have to just wait and see how things play out. But this is a good indication that the yen is really starting to strengthen, and we could really see some meaningful downside here. And we're on the right side of that. Aussie yen is another one. Unfortunately, we missed this little flag, but you can see the structure just looks really good for this move down towards 82 on the chart. In terms of the entry for this, wasn't a great flag. It's probably why I missed it. But if you did take this with our kind of flag strategy, it wasn't ideal as a flag strategy, but this setup was pretty decent in terms of a riskier structural play. And you would be nice in the profit at the moment. And this should be a little bit choppy. So we should see this get a little bit more choppy, chop up, then head down. So you may have opportunity to get into this trade at a later date. You may need to manage this trade in a meaningful manner as well. My only concern with the Aussie yen trade is it's possible that what we're seeing here is a central structure, because I don't really like this as a C wave to the downside. So you have a 1 down, 1, 2, 3 up. We have a 1 down now with a little bit of alternation. You might see this go test the highs once again. So I think taking break even on this trade, if you are in it, is the best way to play it. Obviously, we're going to get a good opportunity down the road to get into this trade later on as a really clean ABC corrective structure. And then obviously later on in the trade, because we have such a nice clean running flat with really defined structure, we can look for the long from kind of 83 onwards. And so really good trading in the Aussie yen up and down moving forward. Euro CAD, we were looking for a little bit of a long trade in this from the weekly structure point of view or daily structure. As you can see, we had impulse up, 1, 2, 3 down. We've gone into the kind of no man's land here, which is a good sign that we're going to start to accelerate upwards from this region. So we were looking to play this as an extended or oversold hourly flag play. We took one small loss on this trade earlier on, 1%, because our flag trade didn't play out, and we got presented with another opportunity and being presented with another opportunity as we stand. So there was another opportunity here that you could have been in. I never took this. I was away from my desk on a meeting. Unfortunately, it would have been a really nice trade, but possibly would have taken break even. We're now getting some meaningful upside and a little bit of a corrective structure. So if this starts to chop around and gives us one more down leg, we can start to see this as a lower time frame correction. I think this trade is going to be worth taking as well. And what's nice about this trade is it kind of hedges us against our euro yen short. We can be long euro CAD, holding 2 positions, and at least one of them should pay off in terms of our risk reward. We also have the Euro New Zealand trade running those, so you need to just be kind of selective as to what you're looking at. If you look in isolation, Euro New Zealand's at break even, so you can kind of just trade between the euro yen, euro CAD, and see how things play out from there. So yeah, it's kind of technical at the moment in terms of trading the euro, but there are some good opportunities for profit if you place yourself or position yourself in an intelligent manner. I want to add euro pound into the mix now, because the euro pound actually looks really good as well, and I actually prefer it to the euro CAD trade. So if we see the same thing here, we get a chop higher, we get a little bit of a move down, and we get a little bit of a structure in here. This is a really nice lower time frame correction for a move that should take us up towards 87.20, just to match this little structure here. So you can see in terms of structure, the trade looks really good. We have this ABC corrective move lined up, which we can take. Only problem is this may take a little bit longer than we like. We may see this kick to the downside a little bit more before we get that leg up. As you can see, this B wave isn't really as clear as I would like it to be. So we have to just be patient with our entry and really wait for that clean entry order. Yesterday, if you guys were in the session, we took this trade to the upside. It was somewhere in this region. Pretty sure it was here. We took this trade as an economic event strategy, where we were waiting to see if they were going to see some miscalculations or some mispricings in the market from that pound or BOE interest rate decision. We saw a little bit of upside in it, and it kind of stalled out. If we go into lower time frames, you can see exactly what happened. Let's just go into the 1 minute chart, because that's how we were trading it on the flag. We're trading it on the thing. So this was, our entry order was above these highs. And as you can see, we had a really strong spike after the BOE. And then we saw some downside and just struggled to get momentum. So I actually took the trade off in this region here. And then we moved up again, chopped back down. So we're still chopping in that break even section. So if you are still in that economic event strategy, I would move this to break even now and see how things develop. We might, like I said, we might see this develop into an ABC running flat for upside. This may have been your first move higher, and you're starting to get this little A, B, C structure. But I wouldn't rely on it too much, because the higher time frame isn't as clear as we would like it to be. So economic event strategy worked out really well, because we got break even without taking too much risk. and we can now wait for a better entry to the upside on the euro pound. So again, lots of euro action at the moment. Euro New Zealand, euro yen, euro CAD, euro pound. Already short euro yen, already long euro New Zealand. So maybe choose one more if you really want to get into these. I like the euro pound because of the structure, if we can get a nice clean entry. So I'll be looking at that today to see how things develop in this region on the lower time frames. UKOIL, a little bit of a painful experience, but these things happen all the time in trading. As you can see, we got into the trade a little bit late because this was the little entry that we had here at 70.60. We got into some really nice profit. Then the trade reversed against us and took us out for break even. And as you can see, it wasn't even price that got us there. It was actually slippage that got us there. It was the spread that took us out of the trade. And as we got taken out of the trade, we just saw this big acceleration to the downside. So if you manage to get into this trade at the right level, you'd be still in it and you'd be seeing some really nice profit. As you can see, you'd be sitting at probably a 2% at the moment running. And the downside still looks really good to me. I still think this is going to get some legs to the downside. There's no real structure. So in terms of managing the trade, if you want to lock in some profits, you can maybe partial close or trail your stop down here. Usually when I manage trades, I like to wait for 1 hour crossovers on the MACD. That gives me a good indication that what we're seeing is a decent wave down. Maybe we get another leg lower, and then you move your stop to that region. That's a nice way of managing stops. You have to just be patient with it. Obviously, there's the danger that we're going to see this rally to the upside. But structurally speaking, the only way that's going to happen is that we really start to chop back up to the highs as a B wave, and all of this becomes an ABC for further upside, which I don't really see from the higher time frame structures. It is possible, obviously, we need to take it into account. But if it is going to be choppy, you're going to be able to get out for at least a little bit of profit on this oil trade. So it's worked out really well for you if you manage to stay in it. Another setup we're looking at really sternly is New Zealand dollar, US dollar. Zoomed out, you can see structure-wise, we have a really clean setup. Impulse, ABC, expanding flat, and we're looking to impulse to the upside. Then we zoom in, and we have that lower degree corrective structure. So two ways of playing this moving forward. You wait for a little bit of a flag here. You take a little bit of a higher risk trade on this flag. Alternatively, you put an entry order above these highs, stop below these lows, and you trade it as a lower degree corrective structure, meaning our upside target is kind of 170 or 0.782. So you'll get a good 4 or 5 to 1 out of the trade in terms of structure. Just need to see, is this correction long enough to deem this the right fashion? It's right on the edge. So I would actually work towards a 0.77 target. So you need to work your risk reward around that, in which case it may be more prudent to maybe just put in a lower degree position, like a 1% risk, if you find a decent flag in this region to take to the upside, instead of maybe a 2% risk position on a wider risk. So you kind of have to decide, you're going to go get in earlier and keep the risk low, or get in later with a wider stop and a higher risk. That's kind of how you need to decide how you're going to play that. Structure-wise, it looks really good for the what we call the lower degree corrective structure strategy. So you kind of have to decide which one it's going to be. If we get a perfect flag here, I don't see why you wouldn't take that to the upside. Maybe just have a little bit of a wider stop, or you could even actually have a narrow stop because it is higher risk. So 1% risk, really narrow stop, and that trade then becomes a kind of 7-8 to 1 risk reward rather than a 4 to 1 that is lower risk. So you kind of have to decide for yourself how you want to play that balance. But the trade looks really good to me. It's against our kind of it's a counter to our dollar strength thesis, which is always good to find a trade that's against your kind of views of the market. Because if you're wrong, you can still profit. And obviously, if gold and silver are going to rally, you're going to see something like the New Zealand dollar, US dollar rally as well. So it kind of aligns with that. So you might want to take in this trade around managing your gold and silver trades, taking advantage of that. And then finally, pound dollar, which is kind of counter to that. Like I said, the markets at the moment are really messy, really choppy, really messing us around. but I'm still really pound bearish. And I think what we're looking at here, actually going to just extend this further down, move this entire structure over one. So what I think we've seen is one big impulse down. We've seen an A, B, C. We're seeing a D now. We might get an E wave down the line, and then we get some more downside from there. Obviously, still possible that what we're seeing here is an A, B, C, D, E, and we get downside from here. So you might see this accelerate to the downside. I still have my entry order below these lows. I'm still interested in the short. I'm still trading the higher time frame structure, which says we're in for a long run on this one, and we're going to trade this down to kind of parity on the charts. You have impulse up, 1, 2, 3 down, impulse up. We've matched all the targets we need to match, and we're heading down from here. So I really like the trade. In terms of the setup, it's a lower degree corrective structure setup. We're just trying to figure out what the structure is itself, because there's nothing there. Entry order below the low is safe, I think, because the only alternative we have here is a really slow chop up towards the highs as a B wave, and then we'll get a C wave to the downside, which we could trade. So in terms of risk reward, I like the trade, I like the setup, I like where my order entry is. We just have to be patient with it to see how things develop here. But if the pound starts to move meaningfully down, I know I'm in good stead to trade this. Obviously, it's counter to a New Zealand dollar, US dollar long, which is a nice hedge. So again, it's very technical at the moment because we're trading a lot of various hedges. So you really have to be sharp. You really have to keep your wits about you and know your positioning really well. But really set it out, saying what happens if this goes wrong? What happens if this goes wrong? Lay all your charts, all your trades down on a piece of paper, and you can see your overall outcome. So if New Zealand dollar, US dollar goes against me and I lose 1%, but the pound goes for me and I gain 5, 6, 7, 8%, then net out, that's really good. Then how are these euro trades going to net out? If my euro New Zealand trade goes against me, I've finished break even. But if euro New Zealand goes against me, there's a good chance euro yen is going to work for me, in which case I get 6.8%. And if it flips it around, I'm losing 2% on the euro yen, but gaining probably another, there we go, another 4.7% on the euro long. So between euro New Zealand and euro yen as hedged bets, at the very least, I'm going to be getting 4% out of it, more than likely. Or sorry, 2%, because we're going to lose 2% on the yen. We're going to gain 4.7 on the euro New Zealand. So net for net, I'm positive either way. And then we can start to see, are we going to add in the Swiss and the Aussie? I don't think so right now. I think it's a bit early. We'll see how things play out there. And then we can maybe add in a euro pound long if the setup's really good. Because if the euro pound works and the euro New Zealand work, we're going to get kind of 6, 7% out of those longs and only lose 2% against the euro. So like I said, we can be very technical with our trading at the moment, really hedging our bets, finding the right entries, and we can really take advantage of these choppy market conditions. It is very technical, but it sounds very complex, but it's actually really simple. You choose the right single trades, and then you see how all of these single trades kind of come together as a compounded trade, and what you can expect from the return, your risk reward profile, if things play out in an either or scenario. So cool, guys, that's it for today. Members, we'll see you on Monday for trading strategy. We'll also have that weekly game plan uploaded on Sunday for all the public guys. If you're not a member yet, come join us. Things are really moving in the markets. You can really take advantage of these market conditions. And I promise you, your membership is going to pay for itself in these kind of conditions once things start to move. You just have to have a little faith. Come do the course. Come learn the trading strategies that we have. Learn the technical analysis strategies that we have, the technical analysis that we use. And I promise you, it'll blow your mind. It'll be more accurate than any other technical analysis system you're using at the moment. I guarantee you that. If not, I'll give you your money back. I promise you. It's cool, guys. Have a good weekend. Enjoy your Friday, and we'll chat again on Sunday for the weekly recap.